Hello and welcome to Follow the Money. I'm Raine Musñgi. Join us as we explore the tools and insights you need to jumpstart your financial journey. Southeast Asia is seeing a $4.16 billion in foreign investment outflows, while the Philippines faces slower than expected GDP growth and a downward revision of its 2024 target due to global uncertainties. At the same time, Fintech and startups are gaining traction with Mitsubishi's 18.4 billion peso stake in MYNT and a 16% rise in Philippine startup funding, signaling investor interest in emerging sectors. Joining us is Rafael Garchitorena, Managing Director and Chief Strategist of Regis Partners, to weigh in on whether these trends point to resilience or deeper risks for the Philippine economy. Rafael, thank you so much for joining us. We appreciate it.
Thanks, Raine. Thanks for having me.
Welcome to Follow the Money. Now, the Southeast Asian markets experiencing foreign investment outflows, that's not just the Philippines. It's totaling $4.16 billion this year. How do you assess the immediate impact on market performance and investor confidence?
Yeah, thanks. I mean, investor sentiment's been broadly risk-off or risk-averse since late last year. Obviously, the uncertainties over the U.S. trade policies and how these will affect the global economy. We saw here in the Philippines, where the equities market saw more than $700 million net foreign outflow from November last year up to February this year. So initially, the flows were out of everywhere into the U.S. But that narrative has sort of shifted with talk of a U.S. recession back on the table. This is also why we're seeing a sort of flight to safe havens like gold, which is currently now firmly above $3,000 up around 20% this year so far, and up 40% year on year. Now, thankfully, sentiment has turned a bit more positive, or at least a little less negative, towards the Philippines and, of course, Southeast Asia and emerging markets more broadly. Mostly on increasing expectations that the Fed will cut interest rates this year. And of course, potentially rate cuts by the central bank next week as well. It's actually just to show the sort of shift in sentiment. The month of March, we posted a $50 million net inflow. That said, we're still about $210-ish million negative for the first quarter of the year. So hopefully we see a continuation of the trend set in March for inflows for the rest of the year.
Yeah. Do you expect that, how has been the trend in the past few years? Have we been a net inflow or outflow?
Oh, it's been, up until last year, it's been pretty much 7 consecutive years of outflow from the Philippines. So I think we pretty much wiped out all net foreign buying since 2011, I think. So yeah, we've been pretty consistent net outflow for the last 7 years until last year. Foreign ownership of Philippine equities today is down to around 19%, nearing all-time lows. So I think in sentiment towards the Philippines is lukewarm at best from the foreigners.
What would shift this kind of sentiment? You noted already there's a positive inflow the past month, but that's fleeting and temporary, especially if it's going to be based on the Fed and BSP's movement. Is the changing trade policy in the U.S. by the U.S. Going to actually change sentiment?
Short answer is no. I think a lot, as you pointed out, right? In the near term, the shift in sentiment towards emerging markets, Asia, ASEAN, Philippines, are really, at least in the very short term, hinged on expectations of U.S. Fed rate cuts. Beyond that, when your lead into the conversation really talks about sort of underperforming GDP growth, concerns over the BOP, current account, twin deficits, etc. And then of course there's the market reality that the Philippines is a pretty small market and pretty illiquid. And like I said, if we're in a risk-off sentiment, then typically the smaller, less liquid markets are set aside temporarily.
Mm-hmm. Understood. Since you already talked about the GDP, and it's not just the Philippines, but a lot more countries are less committed, I think, to revising their growth target due to global uncertainties and, again, potential U.S. tariff impacts. From a market strategy perspective, is there an impact from this revision in investor or revision in GDP? Does it influence investor sentiment and market outlook?
For the Philippines, we at Regis, we're a bit less concerned about U.S. tariffs as it affects the Philippine economy directly. We do have a small trade surplus with the U.S., around $4 billion, if I'm not mistaken, but we're probably pretty far down the list of tariff targets of the U.S. No? Ironically, the Philippines could actually potentially benefit if exporting countries like China, for example, look to sell more goods to other markets like us at lower prices. No? We're actually, so in isolation, if you remove the global concerns, we're actually quite bullish on domestic demand for 2025 in the Philippines. No? First off, it's an election year. And there's bound to be a lot of election spending, which tends to boost consumption during election years, even during midterms. Also, rice prices have come down a long way over the last 12 months or so. And while the drop in local prices is far slower than the collapse in regional prices, and despite our lower tariffs, it does mean significant relief to consumers. So, Feb inflation was down to 2.1%. The central bank already talked about their target for March between being 1.7 to 2 point something, I believe. So it looks like even they're guiding for lower inflation for March, which gives the central bank a lot of elbow room to cut policy rates, which should boost market sentiment here.
Considering, so the last time the market had a shock, it was the Philippines reporting its fourth quarter 2024 GDP growth at 5.2%, falling way short of expectations. What does this indicate about the current state of the Philippine economy and its market performance for you?
Yeah, no, we were quite disappointed too by the GDP print last quarter. No? However, I wonder how much of that was really affected by the unusually strong late typhoons in fourth quarter. No? Typically, third quarter, patapos na yung typhoon season. Most of our other demand indicators were quite robust heading into 4Q and even into the first couple of months of 1Q25. No? Loan growth is pretty strong. In fact, loan growth is accelerating to a 5 or 6 year high, if I'm not mistaken. Consumer lending is pretty robust. Non-performing loans are behaving themselves. Car sales are still up 10%, et cetera, et cetera. So it could. I think where the frustration really has been in the Philippines is, on the one hand, yes, we're very consumer driven. And again, near term, we're pretty confident in a rebound in consumption after the very high rice prices in 2023 and early 2024. But for Regis, one of our biggest frustrations has really been the slow pace of infrastructure spending, no? And how that's limited private investment as well. So we're hoping for more big ticket PPP type projects to kickstart the economy for more long-term trajectory for growth.
All right, that's a good call to action there. But meanwhile, we already touched on the market a little bit. The market, of course, we were speaking with one of the analysts and saying that we don't really need much foreign capital flowing into the markets. We can actually fund our own, market. Lots of excitement around initial public offerings. Do you share the same sentiment?
Yeah, I mean, it's been. So I think, sorry, yeah, it has been a bit frustrating. You're right that we really don't need foreigners to come back. We've noted that locally, probably more importantly than foreigners, there's a lot of money invested in the Philippines locally. Just looking at the assets under management, or AUM, of domestic fund managers, there's 7.4 trillion pesos, trillion with a T. That's just the banks, and the other institutions that are covered by the central bank. No? And the asset allocation into equities today is only around 10 to 12%. That's half of where it was in 2015-17 at the peak. So if you can imagine, every 1 percentage point move of that 7.4 trillion from fixed income, dollar, whatever, into local equities is 74 billion pesos. That's $1.5 billion US dollars. We don't theoretically need foreigners, but obviously they would help. So yeah, I mean, you're talking about IPOs. We're quite excited about at least a couple of big ones. Obviously, MYNT, Gcash you mentioned, MYNT as well. And again, there's some concern that the market's not liquid enough, blah blah. We're hoping that we can attract some global funds, not just the Asia funds externally. And like I said, if we can get the local fund managers to allocate more funds from fixed income back into equities, then it shouldn't be a problem absorbing fairly large IPOs.
Right, and this particular case may already be a sign. Mitsubishi's acquisition of half of Ayala's stake in MYNT, valuing the fintech at $5 billion, signaling growing interest in the Philippine fintech sector. How do you see this development in terms of market performance and future investment opportunities in fintech? Apart from Gcash and MYNT, are there other IPOs that you're really looking forward to this year?
I think those are the two big ones. But just zeroing in slightly on so the potential MYNT Gcash IPO is definitely going to raise profile for the Philippines. Both in the financial world and in the fintech space. A successful IPO would be good for the sector, good for the market in general. Lalo na if they're able to get the valuations they're looking for. I think the company was quoted as targeting an $8 billion market cap. Which will be pretty huge for an IPO, probably the biggest IPO in the Philippines. This could encourage other fintechs and digibanks to list. Maya has already signified its own potential to list, right? And the data around digital adoption is pretty compelling. The combined InstaPay, PesoNet payments last year were up 35% year on year. They're up 36% again in the first 2 months of the year. And I think in terms of volume of transactions over InstaPay alone, I think it's 67%, 68% up in the first 2 months of the year. So pretty aggressive and quick digital adoption. So obviously, fintech could also be a huge driver of financial inclusion. Loans in the banking system are only 11% of GDP. So giving more Filipinos access to formal credit and away from the informal 5-6 lenders could be quite powerful as an economic driver, and also potentially pretty profitable for the operators. And again, the other one that we mentioned was MYNT as an IPO. That'll be interesting. Very different from the high growth, exciting fintech. Good stable utility. That'll also be interesting to contrast against Manila Water, and both offerings will be pretty substantial in size. So the hope is that the IPO size and success will attract new money both globally and locally into the market.
Are there IPOs that you would like to see happen in the near term?
The more the better. We haven't had a chunky IPO in a few years. Anything to drum up interest in the Philippines.
Perhaps Maya and MPTC?
Oh, for sure. No, like I mentioned, Maya is definitely looking. Any of the digibanks would be interesting as well. MPTC, again, you have the both ends of the spectrum, right?
Right.
The exciting digibanks. You have the more stable cash flow stuff. So more REITs, anything that deepens the financial market will be very, very welcome.
All right, we want to touch on the startups as well as more of the economy in a few moments, but we do have to pause for a few reminders, but stay on BNC and follow the money.
Good morning, I'm Mikey Oreta and you're watching Business 360 where we break down the numbers.
This week we saw the S&P 500 make a new historic high.
Connect the dots.
I withdrew from the World Health Organization.
And give you the developments and insights you need to navigate, adapt, and lead. Ayala Corporation is funding artificial intelligence and data science research at the University of the Philippines.
Business 360, hosted by Mikey Oreta.
Keep it here on BNC.
The Bilyonaryo News Channel.
Good morning, everyone!
Let's begin your morning with these people that gives you the hottest information.
I'm Pablo Del Rosario. Let's get you up to speed with some news that you could use right now.
Rise and shine, beautiful people. I'm Ann Assis Carillo.
And I'm Monique Tuzon. Your mornings are always more fun with us.
With excitement,
It was amazing.
positivity,
Everything is so beautifully made here.
and fun to start your day.
Only here on...
It's a beautiful day!
And we're back on Follow the Money with the Managing Director and Chief Strategist of Regis Partners, Rafael Garchitorena. We were talking about the fintech industry earlier. Philippine startup ecosystem itself raised $1.12 billion last year, a 16% increase from the previous year. How does this growth in venture capital funding reflect on the overall market performance and investor appetite in the country?
Yeah, that's a bit of a double-edged sword, I think. On the one hand, any sort of incoming funds flow is good news. Any interest in the Philippines is good news, both for the broad financial markets and, of course, for the entrepreneurs themselves who are getting access to pretty exciting growth capital now. On the other hand, it is telling that very few, when VCs sell to PEs, very few PE funds exit in the stock market, in the PSE. Instead, most of these guys would rather sell to other VC or PE funds or sell to larger companies in trade sales. So it's been on the one hand, yes, very exciting. On the other hand, paano naman kami in the stock market? We've really not seen enough of these guys exit in the or do a listing via IPO. To be fair, stock market valuations haven't been particularly enticing in the last few years. But yeah, no. So I'm quite good friends with people in the VC/PE space, and yes, it's actually quite exciting. There's a lot of activity. We're a bit late to the game compared to the rest of Asia, but it'll be again, looking at the fintech space and other PE type investments. More is better, I think, in terms of getting funds flow into the economy.
Are there particular sectors that perhaps investors should be focusing on putting their money on at the moment?
Lots of stuff. There's obviously like I said, fintech is obviously one of them. There's a lot in the food industry that's pretty normal. Things we would like to see a lot more of would be things like in the not quite infrastructure, but logistics, cold chain, maybe agriculture investment, more modernizing agriculture, fisheries, whatever. So yeah, there's lots of capital-starved segments of the economy that could do with more private funding.
Is energy passé at this moment?
I wouldn't say passé. There's already a lot of money looking at alternative energy, wind, solar, etc. Obviously, ASEN and all the big groups are investing very heavily in renewable energy. I think you guys plan a feature on pumped hydro as well. So new and different stuff. All of it will be good for us since we're so dependent on imports for coal and oil. So anything that will bring more domestic sources of energy will be very welcome.
Talk about imports. Of course, the Bangko Sentral ng Pilipinas projecting wider balance of payments and current account deficits due to slower global trade and subdued investor confidence. What are the potential repercussions, perhaps, for the Philippine financial markets?
Yeah, for us at Regis, we're sort of obsessed about the current account, and so yeah, the current account deficit is a bit of a problem, especially because we're also running a pretty large fiscal deficit, about 5.5 to 6% of GDP. So back to the current account, as late as December, January, the BSP was forecasting a deficit of $10 billion for 2024. Or about 2.2% of GDP. The actual number came out last week at $17.5 billion, not 10, and 3.8% of GDP, not 2.2. So it's a pretty big miss. The BSP is now looking at the current account deficit for this year, 2025, and 2026 of around 3.9% of GDP. And that still assumes the BPO revenues are growing 5% per annum, which, depending on who's talking, could be, at risk of disruption from AI. So yeah, I mean, a wider current account deficit just puts more pressure on the peso and makes the economy a bit more susceptible to external shocks, et cetera, et cetera. For foreign investors who do invest in USD, clearly a weaker peso, if only relative to other peer markets, would make us a bit less attractive as an investment destination. So, it's something we need to address, particularly, as I mentioned, in light of risks of an AI disruption in BPOs. But the upside could come from a recovery in the tourism industry, for example. More investments there would be good. And obviously from the potential passage of a mining reform law, which could revive a big dollar earner for us.
Yep, that's a theme that seems to be recurring, no matter who we talk to, whether it's PEZA, or BOI. And, the economists are also saying that a lot is hinged on the currency. But they're also saying, to your point about tourism, they're also saying that why don't you just let the peso depreciate? And we're still going to benefit in terms of remittances and tourism. Again, the peso is expected to range between 56 to 58 pesos to the dollar this year, but some economists are seeing up to 60. How might this currency outlook affect foreign investment inflows and the performance of the Philippine stock market?
Weak currencies tend to benefit countries that export a lot. And we don't, at least not in terms of goods. We run a pretty large trade deficit. And mostly because our manufacturing sector really isn't competitive, at least even just from a cost of power perspective. Presyo ng kuryente natin, I think for industrial, is like double that of Vietnam and Indonesia, for example. So it's very difficult to do manufacturing exports in the Philippines, which is why the big drivers of the current account on the plus side tend to be labor exports, whether physically sending them out as OFWs and then remitting back money, or labor exports in terms of BPOs. So yeah, a weaker peso would be near-term negative since we're a big importer of stuff. Then it just means the import prices will lead back into inflation for us. So I think in terms of the current forecasts for the peso against the USD, it's a bit trickier because we're now, it's a little bit easier for us because we're in a weak dollar scenario. But it looks like, as I mentioned, if we're running a fairly chunky fiscal and current account deficit, then it would probably make the peso weaker relative to other currencies. And at least from a foreign equity investor standpoint, portfolio investor standpoint, obviously foreign investors typically invest in USD. And many of the high net worth individuals in the Philippines also have access to other markets, whether it's US, other tech ETFs, etc. So clearly, a weak peso would be negative for investments in the Philippines, at least from a portfolio and equity standpoint. I mean, obviously, if you're looking at a weak peso, then foreign investors will be demanding higher peso returns to make up for the potential currency loss. So yeah, we're lucky in that the current weak US dollar environment is generally good for emerging markets in general and for the Philippine market in specific.
All right. Would you like to share with us perhaps your outlook for the peso by the end of the year, as well as for the PSEI? And maybe, if you can, maybe share some stock picks.
Yeah, I mean, we actually did initially have a forecast of 60 pesos to the dollar for year-end 2025. But again, that was when we were looking at a strong dollar in the fourth quarter into the first month this year. So yeah, 58 sounds like a reasonable number to go for, particularly if we see further deterioration in the current account. Yeah, I mean, we've been bullish and wrong on the on the index for the last couple of years now. It's been again driven entirely by foreign sentiment. Hopefully, with a recovery in foreign sentiment, we could see a rebound in the PSEI. We're looking at 7.4 for the year. That'll be in line with the earnings growth. We're looking at sort of 10 to 12% overall earnings growth for the index this year. So, just maintaining that sort of growth will get you to around 7.4 for the index for the year end. Even with that index target, you're looking at index valuations that are at or near historic lows. So the market is still very, very, very cheap. Yeah. So from a stock pick perspective, sector perspective, we're, like I said, we're pretty bullish on the recovery in consumer demand. So the consumer sector is one we like, the likes of Monde Nissin, Universal Robina, Pure Gold, etc. We still like Century Pacific, but the stock's getting quite expensive from a valuation standpoint. Typically, in a falling interest rate environment, you'd like property. The stocks might do well near term, but we're still concerned over supply issues on both the office and mid-income residential condo market. So we'd prefer the banks as another proxy into the macro. So any of the big three banks, BPI, BDO, maybe Metro Bank for the very high yield. And again, in a falling interest rate environment, we would be, I think you'd need to have high dividend yield stocks in your portfolio. Those stocks did extremely well last year, and we expect that to continue this year.
And how big a rate cut would you like to see from the BSP this year?
I'd like to see. We're only forecasting 50 basis points of cuts, but again, we did that forecast in January,
right.
When at the time people are still talking about potential no rate cuts in the U.S. Now, our partners, so Regis, our foreign partner is Jefferies of the U.S. They're still looking at 75 basis points cuts in the U.S. Fed. If that does happen, then definitely we could do 75 as well for the Philippines.
Feels like with a rapidly day-to-day changing of policies here and abroad, we really need to check back with you again in the coming months, in the coming weeks. Well, given the evolving economic landscape, the Philippine market remains in a balancing act, navigating external headwinds, while capitalizing on fintech growth, IPO expansions, and even venture capital growth. Mr. Rafael Garchitorena, Managing Director and Chief Strategist of Regis Partners, thank you for joining us and sharing your insights on the market landscape. We appreciate it. Thank you.
Thank you again for having me.
And that is it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News Channel, always on top.